Nikita, super excited to have you on the podcast. Why don't, to get us started, why don't you tell us a little bit about your background?
Thank you very much for having me. Yeah, so maybe just a quick story. I was a student in 2017, came across crypto. Somebody told me that this is a new emerging technology, largely misunderstood and very volatile. So that sounded like a pretty interesting project to pursue. I created a research team and wanted to build quant strategies to take advantage of marketing efficiencies. And as a kind of just university project, I found 15 guys. We started building infrastructure, started do some trading. And after graduation, we're thinking what to do. And thought the most natural thing for us to give a go is to try to launch a hedge fund. And essentially, I pitched the idea together with my partners about launching a market neutral hedge fund focused on crypto. To the CEO of Fasanara, Francesco, he has been mentoring me for a couple of years. And funnily enough, I did an internship at Fasanara the year before I came to him with a project. So he liked it and he endorsed us and we partnered up. And so basically on day one, I became a partner and kind of head of Fasanara Digital, just out 1 year, well, 1 day out of uni pretty much. And we kind of, I was thinking for quite long and hard because we had a lot of, well, time. And I thought, like, what principles can I come up with that will stay true, irrespective of what happens? And so I thought, like, what we should obsess about is not to blow up. We didn't have, much skill or knowledge to be sure about. So I thought, like, let's really minimize the blow up scenario and hopefully, improve day from 1 day to another. And at some point, th this will compound and we become quite good at what we do. So we launched the fund, and it was, very small, and gradually it became bigger and bigger and bigger. So now we run close to 200 million. The core of the strategy is very quantitative. We do hundreds and hundreds of thousands of trades per day, millions of orders per day. All of it is automated. So the team now is 17 people, and we're growing, launching another fund. And yeah, so it's very dynamic, very exciting, and really building this firm that will be able to really build this diversified exposure to the market and be the gateway for the institutional capital.
Yeah, that's really exciting. Just even to the kind of how where you started, right, Nikki? You became a partner at a firm, like you said, right away. And
Yeah.
what was the capital raise process? What was the perception in the marketplace back then?
It was very different, right? Like people were viewing us as just kids, and we were kids, so that was very fair assessment. I
Mhm.
mean, I think like the heuristics is that if you know 5% more than the next guy, then you already look knowledgeable.
Right.
Um, but clearly we were ignorant about a lot of things, and so that was pretty obvious. But then like again, we were improving from 1 day to another a bit better, and just uh, collecting all this feedback and spitting it out as our own thoughts, and then blending and morphing it all together. But the first capital was very hard, and it took us a year to raise 500,000. And then I think it took us another year to get to two. And then there was like a funny story where like um, throughout I was organizing conferences. For me, it was a way how to build a network. I kind of, as part of this mindset of what principles or what beliefs can I accept today that I think will persist through time. So one of them, I thought that I really need to have a network, and best way to create network is to have something to offer, and create like a platform such that people can come to you. So you don't go individually one by one, but you can build this brand and get people come to you. And so with these conferences, I thought like I can forge relationships with really influential institutions and like on year zero where we have nothing, start already kind of getting their trust. And one of the speakers, he really liked, what we're doing. He came to my podcast. I had a podcast as well, and he liked, what we're doing at the funds. And so he invested 5 million when we had only two, and so that's pretty much, tripled the
Wow.
UM overnight, which was, quite high conviction trades for him.
Yeah.
It, played out very well. Um, but yeah, so there were like a lot of funny moments and surprising situations and all that. But with years, like yeah, you learn a lot.
Yeah. There's a lot of like I like about your story, and definitely want to hone in on this. With take us back to college. What were you studying? And you mentioned you created like a group for traders. Tell us about that. How how
Yeah,
you got involved and where that went.
I mean, I was, in high school and I wanted to do economics because I had this idea that those economists make a lot of money, while in practice I more thought about, finance. People make a lot of money, and it's more like, some very small subset within finance makes a lot of money. And so I was explained that actually maths is what I'm good at, and that's where I should go. So I did a lot of maths. Um, and there, like I studied mostly, well, I did a lot of different things there, but mostly focused on statistics. I thought it's quite practical. And I always, in all areas of my life, I'm always trying to get to the first principles, have scientific approach, and that's really what I think was the most useful about the studies, is to really think, in terms of probabilities, come up with a hypothesis, have some idea of timelines, have some idea of what would it take to invalidate your point of view, have this Bayesian approach where you have either very defined and very high confidence situations, but they're like views, but there you really don't want to be invalidated too often. It's not that people when people are wrong that they get hurt. It's more like when people are very confidently think they are right, but that isn't correct. It's where they blow up. It's like being confidently wrong. So all of these things were some of the things that I picked up along the way. I was yeah, doing maths, and there was like a distinct moment where I attended the first conference I've been to. There were a bunch of hedge fund managers that I was inspired by them because those guys, have skin in the game. They essentially participate in market, and some of them like achieved really impressive track records of, essentially just predicting market better than the others, just creating some structural advantages. And so that was all appealing. And I walked away from that conference inspired, being like, oh, those guys are just, normal people. Some of them were like, billionaires and like legends of the industry. But, they were talking about their early days. And that was all inspirational and, but, somewhat relatable that, 20, 30, 50 years ago, some of those guys were in the same boat. Um, and so that kind of gave me a bit of a sense that, it's all possible. And so I thought like, okay, I really like how this, conference came to be, and some of these guys came and like traded their brand and their time to inspire, students and kids. So I should do the same. So I started the conference, but also I walked away thinking like those guys, what was, uniting them all is the betting on themselves, like having skin in the game, and and rolling the dice. So I rolled the dice by creating a team, and yeah, I thought I can find some guys that are smarter than me. Hopefully, provide some direction on the vision and see where it leads us.
Yeah. And then how did Fasanara come into the story? So you mentioned you were getting mentored. Is that correct?
Yeah, so as a student, again, like I had, I knew nothing, and I had everything to learn. And so I really tried to reach out to as many people as possible and try to, be mentored. I was, to be honest, like my strategy was, got refined a lot, but I just, initially just sheer brute force. And so one of these lucky, situations came to be that I got in front of Francesco. I think he, in the years to come, as he told me, like he thought that, I was quite, ambitious, relatively smart, and quite motivated, and so on. And so he offered me an internship in 2017 in the summer. So by that time, I was already having this, small team, but it was like super early days. Uh, and yeah, I did quite well at the internship. Nothing like remarkable to speak about, but it was very productive and interesting. I always try to maximize my utility and like efficiency. Um, and so and then I came back from the internship to uni, and pushed much harder with the group. And yeah, I called it the Quant Group. Was the idea that we're going to be doing quant things. And yeah, like the guys were excited to partner up and to explore stuff. But obviously, when we went away from like, oh, this is like university thing where you take no risks, you just show up from time to time and do a bit of job, to like where you actually need to take meaningful risk and sacrifice whatever internship or full time you could be doing elsewhere and pursue this greenfield project where I think odds of success were like, I don't know, single digit percent probably. Knowing how
Yeah.
few hedge funds actually survive or scale or
Yeah,
thrive.
that's interesting. You talk about scale too. That probably is maybe talk about some challenges or takeaways that you've learned over the time. Obviously, starting out relatively new to the space, spinning up this fund in crypto. We all kind of know the challenges with banks, with custody, with exchanges. Was this a U.S. fund or was it a non-U.S. fund?
It was a Luxembourg-based fund initially, and now we have Cayman funds. We have quite a few funds, different structures all around. But yeah, I mean, it just you really like start from completely zero, right? But that's that's what was very attractive to me. Like from day one, the most attractive thing for me was that like if we succeed, then I could say like this was in a meaningful way because of the risks that we took, and and there was a bit of luck always plays a role. But then if we fail, then that's also in a very symmetric way, it's because of us, and luck component. Because oftentimes when you're part of a big organization, the input and output, like it's just there is so much mess and noise around, so it's hard to pinpoint. So but here, like, we wanted to have skin in the game and be like really well, getting rewarded or punished for the quality of the judgment that we were making. So kind of in everything, kind of learning from how funds are set up, different clauses that you put in a prospectus, how you market, how you talk to investors, how do you strike, how do you become a good salesperson, how do you attract talents, how do you evaluate talent, how do you motivate the team, how do you manage risk, like all of these things are like, I think, I think it's very valuable in life, to take very simple ideas but take them extremely seriously, and that's what I'm trying to do is to do simple things, but as well as we can, and that's transpires through how we run funds. Like a bunch of our competitors, they created tons of different funds pursuing different strategies, and some of them they closed, and some of them they're like no longer viable, or they're very like cyclical, and in some years like you love it and some years you hate that you're doing it. For us it was like, how can we start with like all weather fund that's has a really explainable edge, and that is defendable, that is durable and persistent through time, get like as far as possible. And then, once we have critical size, then, try to evolve. And that's what we feel like, after 5 years doing it, this year will be, or last year was a lot about that. So we started investing in outside managers, and we started to do a lot more venture. We started to partner up with some projects and do different yeah, like incubation type relationships. So kind of this scale, it's all non-defined, right? Like what the scale, for some people it's getting to 100 million, for some it's to 1 billion, to some it's like 10 billion and so on. And this, levels to the game is what I think, people oftentimes just uh, don't get reality checked just because of the, people they hang around with. And like it's, all about who you benchmark yourself against, which are all, very nice philosophical, rabbit holes to pursue. But eventually at the end of the day, it's like how much P&L you make. It's how much risk you take and how good that risk is versus how much capital you deploy, which is some function of your trustworthiness, your track record, and ability to sell and all that. And and if you're like 10 million P&L type guy, 100 million or a billion, these are vastly different operations. And so I think in this quant crypto trading, so far like in the ultimate level, it's mostly like proprietary trading firms that have the infra, that have the risk appetite. Hedge funds get in there just mostly because capital deployed is still quite small. But I think this year will be a differentiator, and set aside those that can raise and can scale with those that can just run, a decent business and kind of stay as a niche player.
Talk about like your first strategy. Talk about like the first fund that you guys ran and kind of how you expanded into other funds.
Yeah, and this is maybe like a great example to start from or to give to really uh, make a point about this, philosophical approach to what you're doing. I think it's just um, like I spend a lot of time reading biographies, like studying hedge fund managers, just trying to essentially get into their mind of like how they think, how they build their companies, what's their risk appetite. Like some of them, they're extremely conservative, and some of them are extremely, big punters. And both sides could be successful, but these are completely, orthogonal approaches. And so I was asking myself from the very beginning, like what fits me, and what I thought that made a lot of sense to me then is that like I should really like take as little risk as possible because well I haven't proven to myself that I can. So I want to see the data. So the first strategy and the first stuff that we're doing was just running cash and carry trade on BitMEX. This was as least risky as it kind of gets in terms of market risk. And then kind of coming back to the point of do simple take simple ideas but take them extremely seriously is what we did. So then 5 years following that simple strategy, and finally enough, like this was I think 2018, like New Year's Eve, like I was in the office, it was fireworks, and I was hearing them as I was finishing the research paper and kind of submitting it to the guys to review this funding rate strategy. And so kind of 5 years after that we spent literally just doing one thing, but doing it as we believe one of the best ways you can feasibly do in terms of risk reward. Um, and so it's really building a lot of infrastructure, building a lot of deep relationships, understanding all the risks, operationally being as polished as possible. Having a strong team, infrastructure to do it in the best way possible, really. Um, and and from there, like we started to evolve and like really think about ourselves as this, let's say multi-strat hedge fund, for the lack of better word, that really seeks to like operate on different time horizons and take advantage of the market opportunities, whichever forms and structures they come.
Very cool. Yeah, and you talked earlier about, which is interesting, Nikki, about bringing together the team. They're passionate about trading. I mean, how did that come together? Because some people have a hard time bringing together a core team that work well together. That kind of go through that process. I'd love to hear how you went about that too.
Yeah, I think like I really like sport, and recently I I last couple of years my favorite sport became F1, and like I draw a lot of analogies between crypto and F1,
Uh-huh.
kind of half jokingly, but pretty seriously. I'm thinking of my role as a pit stop, so overseeing the trading and seeing and changing the tires whenever I feel like we're going. we're not optimally, set up for the current weather conditions or current, tire, wear. And so finding the team, like, and this is, what I think pains people a little bit is. When they like seek this solution, this trick, this magic, of why certain companies are exceptional successful and like vast majority of them are just barely breaking even. Team is mentioned as one of the key things, but then again, like, team should be valuable. That's the people that are doing work. So it's a simple idea, but then how do you build a team? That's where you need to think a lot. And that's where the analogy with F1 comes. It's like, to get the best driver, you need to have the best car. So you need to have, a platform. You need to have essentially set up where people can achieve their goals. And ambitious people, those, 10xers, they want only so many things. One is like they want, freedom to take risks, but some level of guidance. So that's one trade-off to strike. Then they want to know that they will be rewarded if they bring P&L. The usual thing of you pointing finger at like a pile of cash and then saying like, I made it. you know this is goes a long way in finance, and this is how a lot of the people just leave places because they're just taken for a ride without the payout. So rewarding people, but also just having this exceptional drive for people to believe that they can do it, that it's possible, and supporting them and like developing, like maturing them as a talent, and like being in some ways like a role model, having like a people in the team that are extremely good and they're diligent, and you're like, I would be happy to become a big I would be happy to have a big percentage of my net worth in a fund, which some people already do amongst us. You should be totally, have this idea within the realm of possibilities. So, what that means is like you just need to have this trust. I mean, like it's a really like big topic, which I think people just they very kind of naively oftentimes think about it. I think exceptional people is just vast majority of the time we just won't even hear about them because they're set up and that's it. Like when they for a very short period of time move between places, like there are only a few places where they can land pretty much.
Yeah, I love it. Talk to us about with risk management. How do you guys look at risk management? There's trading risk. When it comes to crypto, there's custody risk. There's potential legal risks out there. How do you guys think about risk management as a whole?
Yeah, I mean it's both art and science. In terms of quant strategies, there is tons of analytics and simulation and research that you should be doing. Pre-trades, post-trades, just holistically evaluating the risk that you are taking. I think like yeah, like we with everything we do, and not only trading but just decision and like prioritization, we always have like risk reward in mind, and like we want to be rewarded for risk that we're taking. Otherwise it's just not a good EV uh, move. So the custody risk, like we utilize the custodians, the leading custodians in the space. Uh, and so we have very robust setup there. Maybe I won't go in too much details of what exactly we do, but we spend a lot of time thinking about it. And this is like one of the areas where I think is very little understood on crypto Twitter. There, like it's all about rewards, and people just punt around when they go from like fiat to this esoteric wallets, MetaMask, Phantom. Then they feel like that these are just chips in a casino, and they can just or like that Twitter profile picture of the founder looks good and he has 10,000 followers, like just punt around. So this is kind of where I think you're just consuming like the risks and like stacking up and like just vastly increasing the likelihood of a blow up eventually. You're almost like guaranteeing it that it's going to happen, at least in partial way. So it just really being diligent and trying to not reinvent the wheel, trying to be pragmatic, taking a measured approach, like building up the knowledge, having tools to manage risk, both in terms of be it insurance or off exchange solutions, or just leveraging some services, having some visibility, to identify if something is just not ticking, if something is just not handled correctly. So it's really like a vast infrastructure piece. But fundamentally, and this is where I think scale is critically important. When you graduate from talking to family offices that kind of like you and trust you, and happy to punt around amount that maybe they're not comfortable, but they're like okay to risk, to like institutions that can't really tolerate big blow up scenarios. You really need to be buttoned up on the operations and like legal risks and risk management overall.
Yeah. Did joining Fasanara, did that help your team a lot in terms of they already have infrastructure, things like that?
Yeah, yeah, for sure. Like Fasanara comes in very handy. Obviously, it's established hedge fund, been around for a long time. So it's for sure, introduces certain um, essentially like cadence and certain like standards that we operate with. That said, like I had quite a few, pieces of infrastructure that were kind of purpose built for crypto. That so they were, quite new to the firm. But yeah, like there is, being part of, of a platform that's, can pass due diligence of some of the, most well-established allocators in the world is for sure like this stamp of approval that the operation is quite robust.
Yeah.
Sure.
Another question, thinking about obviously going from 2017 and 18 to where we are now. Obviously, a lot of technology has changed too, right? Counterparties have changed in the space, and there's been good actors, bad actors across the spectrum through the journey, right? Just maybe talk to us about that experience and how things are maybe a little bit different now, or some things are the same. Love to get your thoughts there too.
Yeah, I think like it was very simple then. Like in retrospect, it was like so little uh, out there. You had, one exchange, two exchanges that were, relevant, and so, like on the perp side, like we've really seen the creation of the perp market, and it was, not without its bumps and some tricky, moments. I think, yeah, I mean, the list is very long, and there's some of the situations are, very amusing. How, yeah, like the BitMEX, dominance, faded away just because, Arthur Case wanted to, yeah, to say maybe a bit, too much about, too many things. But in practice, it's just it's night and day in terms of compliance. In BitMEX, like you had to just have an email address and on you go. That was the compliance procedure, and so they paid quite a lot of in fines for that. But yeah, it's the operations and like it looks much closer to what TradFi looks like. In terms of technology, yeah, I mean, back in the day, you had liquidity on like just, couple coins pretty much. Volumes were, pretty small. If you're talking of 2017, 18, infrastructure was like just disaster. But the what the open market does is it creates incentives for people to try harder, to compete, and to be rewarded. And some people did get rewarded. And FTX, be one of them. Maybe they didn't get to keep it for too long. But some other ones, Binance, OKX, Bybit, and like a lot of the other exchanges, they're like flourishing. And these are some of them are extremely profitable businesses, quite, smart, like very smartly run some of them. And yeah, like, both in terms of portfolio margining, which I think is just de facto set up on all the leading exchanges where you can cross margin between different coins, between different products, and be much more collateral if capital efficient. The advent of some of the DeFi venues, hyper liquids, are doing exceptional job. And all of these tokenomics, but this is could be like a pretty long conversation on its own. All of this DeFi innovation, if you want to go there. But I think as a sex focused hedge funds, I think both the credit market is in a vastly better place. What was happening end of or mid 21 was very very non-sustainable, and so it's only fair that's how it played out. I think like the power balance as well is I think much better. Like you had like just a few firms, which as we found out later on, like not very well run in terms of risk management, were like responsible for such a big part of the activity, and and just brought inflicted such big losses on the unsuspecting retail that just connects the MetaMask and pants around.
What keeps you up at night? What are you thinking about when you know you think about your firm? Like what are some of those risks or different things that keep you up at night?
Well, I mean, the risks is the unknown unknowns. I think the FTX was, pretty much one of those. To some extent, Luna was pretty known, but it still, came, all of a sudden, somewhat, yeah, from unsuspecting place. Same way, like the Three Arrows, and then Genesis, BlockFi, Celsius, and then all the other ones. So these things like you can't let's say forecast them all that well. You can kind of expect that it's quite likely that it can something like that can happen. So you should do like as good of a job choosing counterparts you trade with, um, and doing the onboarding in a proper way. I think it's also very important, yeah, to diversify. Like diversification is hugely important, and yeah, and that's where the scale helps. Like if you have a lot more resources, a lot longer time in the market, you can be just integrate with a lot more venues. So all that helps. But yeah, just really, what keeps me up at night is it's kind of both ways. I mean, some of the crypto risks, like we're quite accustomed to them. It's been 6 years of pretty much real time, pegged to the market and just observing what's going on while being deeply like integrated and knowing ever more so all the key participants of of what's happening. So it's kind of we have a pretty nice pulse beat in terms of like information. um so it's kind of both, yeah. So that's so risks, I think, like we spend quite a lot of time just monitoring and just keep on like refining and getting better. But it's also like the reward, like we really like want to make sure that we control the growth, and that we don't get ahead of ourselves, don't get too excited where because that could be yeah expensive. um so I want to just be as measured, as long-term focused, but at the same time taking enough risks. Like if you're not taking enough risk, then you're taking too much existential risk almost. So you kind of need to strike good balance, and yeah, just try things out, refine the judgment, incorporate latest information, and yeah, roll the dice.
Yeah, yeah, definitely. You mentioned also diversification as one thought process. I'm curious from a trend perspective, with AI being all the rage, generative AI specifically, combining with digital assets or crypto. Any thoughts about kind of where that narrative is going relative to the crypto?
Well, the AI coins, to be honest, I can't really comment much.
Yeah.
I'm not too deep on in the rabbit hole on that narrative. It's quite
Mhm.
amusing to observe it from the sideline.
Right.
Um, I think, just 2 cents, like on Gen AI, I think it will redefine how the world is functioning. I think the inferences will be a huge growth vector for the leading companies, the picks and shovels, the Nvidias of the world. I think we're still like in very early phases. The computer is still big time throttled. Like capacity is just not enough. Like people want to throw in more and more resources because there is more and more problems to solve. But I think like some side effect is like big players will harness the most rewards out of it. I feel just because they're going to be using much more resources to run the most complex problems and get just better answers. I think like we're close to the frontier where some of these really creative, unsuspecting moves can be proposed by AI that people just don't even have like on a radar, just like DeepMind with their Go
Mhm.
AlphaGo model.
Yeah, yeah. Obviously, like you said, the largest players may have access to the most compute power in certain cases to be able to deploy that into a strategy or whatever they're doing, right? So it'll be interesting to see what happens. To your point, yeah.
Any particular trends or sectors in crypto that you're excited about?
To be honest, it's a tough one. Like yeah, I think overall, like if you look, last year, I don't have like exact numbers on it, but it really feels like so few coins like outperformed BTC. It was like quite underwhelming. Bitcoin like rallied, 120% or something, and like a lot of the legacy coins, the Ripples, the Cardanos of the world like did super well.
Yeah.
Which puzzles me, to be honest. Like I don't have like extremely good explanation of why that is, why that could persist. But yeah, like that can't really like pick up on on the given sector and be like, oh, this is a great risk reward. I think Bitcoin is an asset class of its own, like really detached itself from the market. I'm not sure like a lot of these new narratives, they have legs. I think there is still structural challenge in crypto because as a venture, like so much of this stuff is driven by just venture and like their incentives, and incentives are for those guys is when you have good vintage is to raise a lot more money. When you have a lot more money to deploy, you create these, rich rounds. Rich rounds mean that the founders need to come up with like some funky tokenomics and have this low float memes. FTX, Alameda type, situations where like float is 5-10% FDVs, like some ridiculous number, and then you see like what happens. It's just down only for a very long time. So yeah, I don't know. I think it's just it's hard to be like investor, like a long only investor, because yeah, oftentimes you're just gonna be vastly underperforming BTC, and then risk that you would be taking is probably quite a lot bigger.
Talk to us about conferences. You talked to us a little bit about like how you got into the conference, or you kind of just put it together. Talk to us about how that's expanded over the years.
Yeah.
Yeah, I mean, initially it just started as oh, I like that conference, I should do mine. And I thought, as a student, kind of not knowing too many people, having only ever been to one conference, which was that one, it was like a bit of, a stretch. But then, I thought like, some people can do it. Like, I'm probably not much dumber than them. Okay, like, it's like they had the platform, it's like, 15th conference that they're doing or something, and like, they had a lot of, people helping them and all that. But I thought like, you know, let's say for some reason I thought that I should be pretty good at just solving complex problems. So let me, roll this experiment and be like, I think it's possible. I think it's very unlikely, and it's very hard from like the resources that I have to pull it off. Um, but nonetheless, I can maybe, manufacture something. So the first one was lucky. I pitched, I got, in front of like through like, five whatever introductions, a bit of luck, ahead of in front of senior guy from BAML. He was professor on the side, so he liked the idea, and we did the first conference together. So I kind of essentially did, in my mind like a trade. I was thinking like, they won't let me fail. Bank of America, Merrill Lynch, like, they wouldn't want to invite their clients and like, for it to be like, some shit show. If anything, they can, like if room is empty, then like, they can just put half of their, trading floor or like, whatever, some, analysts to come in and like just to occupy the room so that it doesn't look, too bad. So I felt like I had huge, protection on the downside. And I could learn the craft, create, relationships and whatever. And then, but the second time I was like, okay, now it's time to take on, a bit bigger risk, and do it independently. And so second time I was like, okay, let's, take like some nice hotel. If at the end of the day, like I don't make money and like I lose money, then at least I learn that I should be much more risk conservative. But if I find out that's like it was success, then like maybe I can push harder and like be more convinced of my judgment. So just kind of, that was a nice build up in confidence, because it went well, it was very successful. Then I did it in New York. Basically, after the second conference, I was like, the next one is in New York. Having never been there, having had to get a visa, I wasn't even sure I gonna get one. So then in like 3 months, I did it in New York. And then I just kept on doing it, and it was, quite nice and fun. Um, and now it's a seventh conference. It's crypto only, focused. Got like 400 people or so, like some of the biggest, companies, hedge funds, bunch of our investors and like our partners, friends. So it kind of became more of like a closed, community where we don't really need to sell, and we're not really looking to sell. It's more like just gathering like a nice crowd and just having a good time.
That's great. You guys have
Yeah.
that in London, is that right? Is that where it's at?
Yes. Yeah, so that was in November at Peninsula Hotel. It was like basically like one of the nicest openings of the past quite a few years. And so like we do a dinner plus a conference for like 400 people. Um, and yeah, we're gonna be doing another one. Just yeah, landing on the exact date.
That's really cool. That's awesome.
Nikita, what advice would you give to somebody that's young, maybe a college student like yourself, back in the day? What advice would you give to somebody like that that's looking to enter the industry?
Yeah, I think it's spend a lot more time thinking about what edge you have. And I think one thing that is almost universally true is like people take too little risk. Like I think people are like so conservative. They're so like, oh, let's get like a stable job. Let's not be risk seeking. Let's not try new stuff. That's just a bit better than yesterday. I think like you should when you have little to lose, so you should just try to get the experience, and that will set you apart, because you should just grind harder than the others, like if you want to achieve more than others. And I really like the quote of the best way to have success is to deserve it. So you should really do differentiated things in order to have differentiated results.
That's really
Great
cool.
points.
Yeah,
I love that.
that's great. One last question on my side, Nikki. I mean, going off of what Mike just said, what advice would you give a new fund manager who's looking to launch a crypto fund, current state today, given your journey and what you experienced?
Yeah, don't blow up. That's the biggest one. Just don't blow up. Like if you can survive long enough, like you'll have capital and all that. Just don't blow up. Try to learn. Just try to get to the point where you're like you rarely meet people that are more knowledgeable than you on the topic. If you get to that state, then it just you have all the advantages, in your favor. Lindy, this idea that the longer something existed, the more likely it is to continue to exist. Like it plays a big role, and that's where the track record is so valuable. Like if you've been around, if you say coherent things, if you haven't blown up, uh, then like you stand like you're in a competition, you're in a race. If you
Yeah.
know if you blown up, like you're out of the race, it's game over.
Yeah. Live to fight another day, right? Don't blow up and keep
Exactly.
it going.
Yep.
That's awesome.
Nikita, anything in your end that you want to talk about before we wrap up?
Well, nothing really. I mean, if somebody wants to kind of, get in touch, then, please, feel free to like be it on LinkedIn. I occasionally write some stuff, about, be it trading or some thoughts that I have, and a bit on Twitter, aka X as well.
We'll make sure to include all your links in the show notes, people to reach out to you and Fasanar.
That's great. Yeah, we really appreciate the conversation, Nikki. This has been great.
Awesome. Thanks, Nikita.